Amazon. When you think of them, you think of the everything store, right? The undisputed king of the cloud. I mean, it's a company so dominant, it almost feels like a force of nature. But lately, the market has been grappling with this huge paradox. The stock took a shocking nosedive, right as the company unveiled one of the biggest spending plans in corporate history. So what's really going on here? Is this a sign of weakness, or is it actually the first painful step towards absolute AI dominance? Let's dig in.
So it all came to a head on March 27, 2026. The closing bell rings, and Amazon stock is at $199.34. Now you might look at that and think, okay, what's the big deal? But here's the thing. It smashed right through that critical $200 psychological barrier. For traders, for investors, that flashing red number was like a blaring alarm bell going off. So what on earth caused this sudden crisis of confidence?
Well, it wasn't just one thing. It was really a perfect storm. First up, the headline grabber, a mind-boggling $200 billion spending plan for 2026. That gave investors some serious sticker shock. Then, you had a very high-profile security breach on AWS at the European Commission. On top of that, a key leader in their custom AI chip division headed for the exit. And to cap it all off, you just had general anxiety about the market. All four of these things hit at the exact same time.
Okay, so here's how we're going to unpack this whole paradox. We'll start with that stock shock and a really confusing cash flow story. Then we'll get into Amazon's massive AI bet, uncover some pretty powerful hidden growth engines, look at the major risks they're facing, and finally wrap it up with the big dilemma that every investor is wrestling with right now.
First things first, let's tackle the central mystery that has Wall Street so confused, what I'm calling the cash flow paradox. It's really a tale of two numbers that, when you first look at them, they just don't seem to add up at all.
All right, look at this first number. In the last 12 months, Amazon's day-to-day operations generated an absolutely staggering $139.5 billion in cash. That's up 20% from the year before. This tells you the core business, the very engine of the company, is just humming along, making more cash than ever. It's an absolute beast.
But then, you see this number. Free cash flow. This is the cash that's left over after you pay for all the big investments. And it is absolutely plummeted from over $38 billion down to just $11.2 billion. I mean, that's a 71% nosedive.
So this begs the crucial question. How can a company generate a record $139 billion in cash, but somehow only end up with $11 billion left in the tank? Where in the world did all that money go? Well, the answer comes down to one really important financial term.
Capital expenditure, or CAPEX. Now, this isn't money being wasted on things like salaries or marketing. This is money being invested to buy, to build, and to upgrade the physical stuff that's going to make money for years and years to come. We're talking data centers, servers, cutting-edge tech. And Amazon? Well, they're spending it like never before in history. And this brings us to the real heart of the story. You see, Amazon's spending isn't a sign of a business in trouble. It is a calculated, almost breathtakingly large gamble to completely dominate the next era of technology, artificial intelligence.
Now, this chart really puts the sheer scale of this bet into perspective. I mean, look at this jump. They're going from an already massive $132 billion in 2025 to a planned $200 billion in 2026. That is a 52% increase in a single year. This isn't just an investment, people. It is a declaration of war for the future of AI.
So what exactly are they targeting with all this cash? It's a market called AI inference. Now think about it like this. Training an AI model is like teaching a chef a really complex recipe one time. That's expensive. Inference is that chef cooking that meal for thousands of customers every single day. Every time you ask an AI a question, that's inference. And Amazon, they want to own all the kitchens and all the pipelines that deliver all those meals. And here's their secret weapon. This is how they plan to win. See, they aren't just buying up all of NVIDIA's chips. They've built their own. It's called Trainium 3, and from what we know, it is an absolute beast. We're talking 4 times faster performance than traditional GPUs, 40% more energy efficient, and it can slash costs by up to 40%. And you want to know if the market is convinced? Get this, their entire supply, all the way through the middle of 2026, is already completely booked. But here's the thing, that AI bet, as huge as it is, it's not the only powerful story happening inside this company. Let's peel back the curtain and look at some of the hidden growth engines that a lot of people tend to overlook. This table tells a really fascinating story.
So you see all that revenue from North American retail? It's huge, right? But look at AWS. It makes way less in sales, but pulls in almost the exact same amount of profit. It contributes nearly half of the company's entire profits. AWS is the cash engine that's funding everything else. And it doesn't stop there. Amazon's advertising business is this quiet juggernaut. It's growing at 22%, and it's starting to rival giants like Google and Meta. And then there's this secret rumor, Project Transformer, an attempt to build a totally new AI-powered smartphone that could let them bypass the Apple and Google app stores completely. Talk about a massive swing for the fences.
But, a company that takes this many big swings also faces the risk of a really big miss. All of this incredible ambition comes with an equally incredible amount of risk. So let's look at the bear case for a minute.
So what could go wrong? Well, there are three really big storm clouds on the horizon. First, the regulatory crackdown. This was highlighted by a $2.5 billion FTC settlement over so-called dark patterns, basically sneaky design tricks to get you to sign up for Prime without really meaning to. Second, that AWS data breach in Europe really damaged the company's reputation for security and trust. And then there's the biggest risk of all. If this whole AI boom turns out to be a bubble, that $200 billion investment could become one of the biggest sunk costs in corporate history.
So all of this, it leads us right to the investor's dilemma. Do you bet on this massive long-term vision, or do you run for the hills from the very real short-term risks and that absolutely shocking price tag?
And this slide right here perfectly illustrates that divide. Wall Street analysts are just completely split down the middle. You've got the bulls who see the stock soaring to $340 if the AI bet pays off. And then you have the bears who see it collapsing as low as $175 if all those risks come true. That huge range tells you just how high the stakes are right now.
So if you're an investor looking at this, what's the game plan? Well, some analysts have mapped out a potential strategy. Step 1 is to accumulate or buy, but do it in stages, especially if the price dips a bit more. Step 2 is to have an exit plan. Maybe you take some profits off the table if the stock bounces back into that 212 to 217 range. And step 3, maybe the most important, risk management. Know your stop-loss point, maybe around 185 to protect your capital.
In the end, it really comes down to your time horizon. One analyst described this whole situation perfectly, I think. They called the current drop the pain of growth. And their conclusion was that for an investor who's willing to be patient, who can look past all the short-term noise, this chaos, this volatility, might actually be the optimal opportunity. Which leaves us right here with the $200 billion question. Is this massive spending spree the necessary, painful price Amazon has to pay to secure total domination for the next decade of AI? Or is it a historic, epic mistake that business schools will be studying for years to come? The answer is going to define the future of one of the most important companies in the world.